Jules, thanks very much for joining us. You recently published some research, particularly looking at the healthcare side in the UK, just revealing that there'd been record investment into the sector. I suppose, talk us through some of the highlights of the research, the key points for you, and what are some of the drivers of that, Jules?
The research that we've been running now started almost 10 years ago. So they're very deep data sets. I think last year was particularly exciting, and it's driven by a number of factors. One, we have an aging population. Broadly speaking, it's a supply and demand issue. The provision of real estate within the healthcare arena is inadequate. It desperately needs inward investment, and investors that understand the sector recognise that. And then one of the other key drivers would be that the average unexpired commercial property lease is only 2 years. So to try and find 30, 35-year, what we call fixed income or long-dated leases, is incredibly difficult. And so you're seeing significant competitive tension from funds chasing healthcare product now.
And Jules, in terms of the sort of capital that's looking particularly at the UK, are you seeing interest from Europe, where we've seen particularly Aedifica and Cofinimo coming into the market recently, and also the US? What's the situation with sort of international capital looking at the UK?
So pre the GFC in 2007, 2008, it was very much domestic led. After the GFC, 2009, 2010, we saw the emergence of US REITs. And then more latterly, you're absolutely right, Richard, we've seen European REITs such as Cofinimo, Aedifica and Corion entering the UK market. And so that then bolstered with infrastructure funds looking to invest within the arena has created a real broad church of different investors in the UK.
And there's been a lot of discussion lately around that sort of topic of impact investment, Jules. Is that something that's playing into this particular sector?
Yes, it is. Yeah. I mean, look, the issues with healthcare historically have been the reputational risks. So the big institutions have in the past veered away from the arena in case there's been an undercover expose by Panorama or that type of television program. And so that has dissuaded investment, but I'm afraid it's become utterly compelling now in terms of the inward investment that's been required. But also, we've all seen it, COVID accelerating the decline of the retail high street and other asset-backed sectors that have been exposed, such as hotels and hospitality and leisure. It's now being recognised, or healthcare has been recognised as a defensive sector.
How do you see the outlook if we're looking to 2021, 2022, do you see this sort of record growth continuing?
I do. Sorry, just to go back to the point around COVID, I think there was an awful lot of rhetoric in the press and the media that didn't understand just how safe care settings are. These operators for the last 25, 30 years plus, a la Bupa, Four Seasons, Barchester, they are incredibly experienced at dealing with infection control, norovirus, and other coronaviruses for that matter in previous years. So they were always going to be in control of it as far as I'm concerned, and they are some of the safest care settings. And that's bearing out now. So Q4 last year, we advised on a record volume of transactions, just over 5 billion. Knight Frank as a house, we've got just over 1 billion of transactions on. And I, in my opinion, the trajectory and other factors such as the bond market and debt markets will continue to fuel investment into healthcare.
You mentioned there COVID and the response from the healthcare sector. I suppose, what have you been seeing in terms of the overall impact on the sector, from the health crisis?
Well, first of all, I would say that healthcare is a very opaque arena when it comes to analytics and data and KPIs. It isn't like the retail sector or the office market where it's very visible, let alone talking about yields or transactional evidence. If you're starting to talk about operational evidence and KPIs, very hard to source that intelligence. Luckily, we have that. I mean, the short answer, Richard, is that pre-COVID national occupancy levels sat at 89%. As of March last year, when we were assisting Care England with track and trace for COVID, occupancy dropped to around 79%. It's now starting to uptick. I think with the first wave, we saw a spike of mortality within care settings. Operators then grappled with PPE and improved and increased safeguarding, barrier nursing within the facilities. And what we've seen is a robust response from the sector. We have seen a decrease in agency costs. Even though the UK has a deficit of some 40,000 nurses, they've been able to recruit from other sectors and upskill carers. So I think across the board, the KPIs are holding up really well, and that gives an awful lot of comfort to the banks and investors.
Yeah, I think it's a really interesting sector, Jules. Great also to begin to see some really good hard data and research coming through, because that's certainly something that's been missing in the market. Thanks very much for joining us.
Pleasure.